Based on Wright's law, Ark forecasts that EV sales will increase roughly 8-fold or a 53% annual rate from 4.8 million in 2021 to 40 million units in 2026. In this video, Ark Invest have an insane new prediction with profound implications for Tesla, Tesla shareholders, legacy automotive manufacturers, and EV startups. We'll look at the new research from Ark Invest, their predictions, and dive into some data to try to understand, are Ark Invest completely insane, right, or both? Sounds like me. Anyway, let's get into the video. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. Ark Invest Big Ideas 2022, we're going to be looking at electric vehicles en route to sticker price parity with gas-powered cars. This is an extremely important milestone, more on that later. But let's drill down just a little bit more and see what Ark Invest has to say in terms of summarizing the EV opportunity. As their range increases, the prices of electric vehicles are declining, overcoming the most significant barriers to customer adoption, e.g. range and price. Based on Wright's law, Ark forecasts that EV sales will increase roughly 8-fold or a 53% annual rate from 4.8 million in 2021 to 40 million units in 2026. By the way, today, 2022. In our view, the biggest downside risk to our forecast is whether traditional automakers will be able to transition successfully to electric autonomous vehicles. If you can't read between the lines, the biggest concern Ark Invest has in terms of this playing out is if a bunch of legacy automotive manufacturers, as in practically all of them, go bankrupt. Wright's law has modeled the decline in battery costs accurately. This is important to understand. If there's a law, a formula that thus far has accurately predicted the cost decline of a technology, it may be a useful predictor of future cost declines. If you actually study things like this, the declining cost of technology, etc., you'll discover there's a lot of recurring patterns. The largest cost component of an electric vehicle is its battery. By the way, this is by a significant margin. These things only a few years ago costing $10,000+ just for the battery. If the most expensive thing in this vehicle is predictably declining over time, we can look into the future based on these declining costs that are following a predictable trajectory and make some assumptions about approximately how much the batteries will cost in the future and therefore electric vehicles cost, and then think about the implications for the wider market, aka consumers buying electric vehicles over ICE. Ark don't just pull these numbers out of their ass. So the largest cost component of an EV is its battery, the declining cost of which will be critical to reaching sticker price parity with gas-powered vehicles. According to Wright's law, for every cumulative doubling of units produced, battery cell costs will fall by 28%. Now think about this for a moment. EVs at the moment are just a few percent of the global vehicle market. Over time, they'll grow to be about 100%, and every doubling in production volumes along the way, 28% reduction in battery costs. The implications here are nutty. What we're looking at here on the left, battery cost decline, this is the cost per kilowatt hour. We can see starting up at $10,000 here, and by the way, we're going down by an order of magnitude each time on the left here. This is a logarithmic, not a linear chart, so the numbers are a little bit clearer, a little bit easier to understand, but just keep in mind, this isn't representing a very steady, gentle decline. It's actually representing an exponential decline. So we can see here over time, the cost per kilowatt hour now around $100, give or take, depending on the battery cell chemistry, LFP versus nickel. And we can see over time from around $100 per kilowatt hour down to 75, 50, 30. So this is something to be mindful of. The more EVs that are produced, almost as a side effect, the cheaper each EV will be for consumers to buy. And because the costs decline, more consumers can afford electric vehicles, therefore there's even more produced and sold, and therefore, yes, that's right, costs decline even further. One of the most, if not the most important slides in the entire presentation, right here, right now. Electric vehicle costs could rival gas-powered options in 2023. Regular viewers of the channel will have heard me say this in different words. 1 or 2 years from now, EVs will be at price parity with comparable internal combustion engine vehicles. This is where everything changes. This is a comparison between vehicle costs, a Toyota Camry in grey, and a 350-mile range electric vehicle in purple. In 2019, huge difference. The EV doubled the price at $50,000 versus $23,000 for the Camry. In 2021, the Camry up a little bit, $24,000. The EV down $10,000 to $40,000. 2023, Ark Invest predicting price parity. And in 2025, things get really interesting. $16,000 for the EV versus a whopping $25,000 for the comparable internal combustion engine vehicle. Let's take a moment for the implications of this to sink in. As I've said, obnoxiously but accurately in the past on this channel, when we get to this point in just a few years' time, where the EV, the superior vehicle on every metric, is not only better in every possible way and doesn't pollute the environment, but it's also way fucking cheaper. At this point in time, consumers who opt for the inferior, more expensive product on literally everything from safety, performance, features, upgradability, infotainment, literally everything, you have to be a fucking moron. So to be clear, at this point in time, 2025, based on Ark's estimates, consumers opting for the inferior, more expensive product have to be dumb or easily manipulated by advertising. 2023, price parity, psychologically very important for many consumers. But by 2025, it gets to a point where you have to be a fucking moron not to buy an EV. And the reason that I bring this up is because, I can't say it with a straight face. I'm going to leave that in there. All right, collect yourself. Oh, this is so hard. I just can't believe how dumb people can be. Legacy automotive manufacturers today, who are being lauded as leading the way by the corrupt president of the United States, for example, General Motors, just to pick on this one company, are aiming to be fully electric in terms of production of vehicles by not this point where you'd need to be brain dead not to buy an EV, which they probably should be aiming for. No, 2035. A decade after you have to be brain dead to buy an ICE vehicle. So when Ark talked about their concerns in terms of the thesis, 40 million electric vehicles, their big concern was these moronic legacy automotive companies continuing to be so blind to what's about to happen. 23 is next year, EVs, price parity. 2025, 3 years from now, nobody's buying ICE vehicles. So just to make sure everyone's following along at home so far, in 3 years, you'd need to be brain dead not to buy an EV. Don't worry about the exceptions to the rule. I'm speaking in generalities, okay? Overall, Wall Street doesn't know this. Wall Street doesn't believe this. Wall Street cannot conceive of this happening. Legacy automotive manufacturers, as evident by their inaction, even their plans that keep being accelerated over and over and over to move towards the EVs, are way too slow. So the analysts don't understand. Companies don't understand. The stock market clearly doesn't understand. Just wanted to make sure that everybody's clear. There is a gigantic disconnect between what people expect to happen in companies, in Wall Street, even retail investors, versus how things will actually play out. Wright's law also models improvements in EV charging rates. The ability to charge an EV quickly is impacted by both the vehicle and the charging infrastructure. Once EV charging rates reach an acceptable level, Ark expects the industry will optimize for other features like autonomous driving, safety, blah, 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 blah. We can see here, once again, historic improvements in EV charging rates following Moore's law. And yes, there is data from all the way back in 1915. Again, we're going up by orders of magnitude on the left here in case anyone missed that. What we're looking at here is charging range in terms of miles per minute. In 2021, around 10 miles per minute. In 2026, Ark Invest expecting this to be closer to, say, call it 60, 75 miles per minute. Think about that. That's 350, 400 miles in just a few minutes. There are some folks out there who argue there's no way EV adoption is going to spread this quickly because charging times are too slow, blah, 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 blah. The range isn't enough, blah, blah, blah. They're too expensive, blah, blah, blah. But as we've seen so far, all of these issues are being addressed simultaneously. Electric vehicle sales continue to take share. We're looking at vehicle sales growth. We've got gas-powered, aka internal combustion engine, ICE vehicles in grey, electric vehicles in purple, ICE vehicles down over 1% in 2018, down over 7% in 2019, down 16% in 2020, and up a massive 1.7% in 2021, rebounding a little bit after the arse fell out of the ICE market in 2020. Meanwhile, electric vehicle sales up 69% in 2018, 18% in 2019, 33% in 2020, and 112% in 2021. And things get very interesting. Electric vehicles are breaking traditional S-curve dynamics. In a typical S-curve adoption cycle, the growth rate of a new technology decelerates as penetration increases. I'm sure there's a joke about your mum here, but let's not go there. In contrast, growth in global EV unit sales accelerated from 60% in 2013 to an estimated 100% plus in 2021. Let's take a moment to understand what we're looking at here. The green, we're looking at an adoption curve. This is increasing over time following an S-curve. At the same time, behind that in the grey here, we have the year-over-year growth rate. We can see in the early days, the deceptive stage, the flat-looking stage of the adoption curve, actually seeing 140%, 138, 135% year-over-year growth. Insane numbers. But these decline 127, 111, 86, 55 around the crossover point here. However, what we're seeing with electric vehicle sales is actually an acceleration. We've seen an increase from 60% all the way up to over 100% during the last, call it almost a decade. This is super insane. So keep this in mind when you hear some of the numbers thrown around and you think that's impossible, that's absurd, there's no fucking way. And now the big one. If traditional automakers navigate the shift from gas-powered vehicles successfully, in other words, if legacy automotive manufacturers don't go bankrupt, this is the subtext. EV sales could scale 8-fold from 4.8 million to 40 million during the next 5 years. Putting things in perspective here, we're going from a few million units per year in 2021 to about 40 million units per year in 2026. So we're over here on the EV Volumes website. Let's look at some recent data about EV sales and adoption and see if we can't extrapolate into the future. This article is Global EV Sales for 2021. If you look at this chart here, we can see a trend line in red showing quite clearly EV adoption following an exponential increase. Okay, this is a very steep S-curve adoption rate. We're seeing an almost vertical move now. It's still early days. The trend is clear. In green here, we have battery electric vehicles, plug-in hybrids, which are a fucking joke. From an engineering point of view, they make no sense. They're going to disappear. But anyway, I personally completely ignore plug-in hybrids. They're ICE cars. They're internal combustion engine vehicles that also have a tiny little battery in them. A battery so small it wouldn't even be suitable for a vibrator. I ignore them completely. As far as I'm concerned, they're ICE sales. But if we follow the green here, the trend here is super clear, and battery electric vehicles, pure EVs, actual EVs, the only EVs, making up 71% of these sales, which equates to 4.8 million pure battery electric vehicles sold in 2021. So who likes being on top? Top 10 EV models, 2020 versus 2021. You can see here, Tesla Model 3, the #1, the best-selling electric vehicle on planet Earth, selling just over 500,000 units this year, 365,000 in 2020. #2, the Wuling Mini EV. This costs less than an hour with your mum, severely lacking on mass, severely lacking on range, severely lacking on safety features. I personally wouldn't drive one of these vehicles. If you're in an accident with anything, including a trash can, you'll lose. Ultra compact, ultra low range, ultra cheap, ultra low safety electric vehicle. There's a huge market for this, something Tesla's never going to touch, but the purchase price just a few $1,000s. So we're not really doing an apples to apples comparison here with all EV sales. Despite costing about 10 times as much, Tesla's Model 3 still outselling the Wuling Mini EV. The Model Y, which is still ramping, okay? Austin and Berlin only producing Model Ys in the first stages of the factory. Production numbers on the Model Y will 2x, 3x, 4x, 5x, and more. Already #3. At the end of next year, the only difference to this chart, the Model Y will be on top. So it's worth noting, the EV market itself exploding. Potential here is just enormous. Tesla already has 2 of the top 3 best-selling EVs, and if you want an apples-to-apples comparison, Wuling Mini EV isn't comparable. In essence, Tesla has the #1 and 2 best-selling EVs on Earth by a significant margin. And finally, global EV sales ranking by OEM/OEM group for 2021. Electric vehicles in green, fake electric vehicles, aka plug-in hybrids in blue. Again, I personally ignore those. We see here Tesla producing more electric vehicles than any other company on Earth. VW making about half as many EVs as Tesla, so Tesla with a huge head start, but hey, it's something. Just keep in mind, however, VW a little bit faster in terms of EV production because of Dieselgate. They were forced to move in that direction. It's kind of worked out okay, but this isn't due to VW's proactivity. They're still moving a lot slower than they need to be. Tesla's running away with it. We know today that it takes VW 3 times as long to make a comparable vehicle versus Tesla. 3 times as long. BYD maybe a third of Tesla's volumes. GM pretty decent, but keep in mind the vast majority of these sales through partnerships, I believe, with Chinese sales. Again, it's not really the same thing. The US, their most important market, they're doing absolutely fuck all there. As we can see, in general, Tesla out with a huge lead in terms of total vehicles produced. And remember, the more vehicles they produce, the more they benefit from economies of scale, the more they can invest in cost-saving manufacturing techniques that wouldn't work at lower volumes, the more parts in common, the bigger discounts they get from suppliers, blah, 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 blah. As a basis of comparison, here are my Tesla production estimates out over the next decade in my bull case, assuming everything that can go right does. I don't expect it will, but I do model out a super best case scenario because why not? I personally believe at this point in time, if things go relatively well, 2022 Tesla delivers close to 2 million vehicles, 1.9. Worst case scenario is probably 1.8, 1.775, but if things go well, could be as high as 1.9 million, maybe even a little more. If we skip forward to 2026, I've got Tesla producing, in the bull case, 7.6 million electric vehicles. So just for fun, let's work out what is 7.6 million vehicles as a percent of 40 million vehicles. What market share might Tesla capture if they produce as many EVs as I'm expecting to in 2026 based on the number of EVs Ark Invest expect will be sold that same year, a 19% market share, a little below where they are today. Seems reasonable to me. And by the way, for those of you interested, those numbers available in my Tesla valuation model. Check out the card in the corner or the link in the pinned comment to join Patreon at the investor support level and above to gain access. Of course, I don't have a crystal ball, can't see into the future, and don't know what's going to happen, but my own estimates are very close to where Ark's at, and I know we both sound completely fucking insane, but here's a question to ask yourself. What if this turns out to be accurate? What if, in less than half a decade, in 2026, 40 million electric vehicles are sold globally? What happens to the legacy automotive manufacturers at this point in time? We saw in Ark's modeling the cost of an EV versus an ICE vehicle by 2025, just 3 years from now, is at a point where you have to be a moron not to buy the electric vehicle. These are just the facts. Consumer behavior will change. Legacy automotive companies who are expecting to be bringing in fat profits from their ICE vehicles for at least the next 10, 15 years are in for a catastrophically rude awakening. I have a funny feeling that once the market starts to figure out how quickly EV adoption is actually taking place, this may have a positive effect on Tesla's stock price. How many electric vehicles do you think Tesla will sell in 2026? Let me know in the comments below. And don't forget to hit the card in the corner or the link in the pinned comment to join Patreon and gain access to over 100 exclusive Q&A videos, loads of other exclusive content and perks, plus my Tesla stock price targets. I'll see you over there. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.